Hello and welcome to Building Tomorrow's Insurer, the podcast where we dig into ideas, innovations, and speak to the people who are shaping the future of insurance. I'm your host, Nigel Fellowes-Freeman, the founder and CEO of Kanopi, and today we're going to get into the weeds. We're going to get into the weeds of underwriting, to distribution, and really kind of how we think about insurance and small business. And I could not be more excited to be joined today by Bill Deemer. He's the head of insurance at Rainbow. He has been in the game for, I think, over 20 years in the commercial insurance industry world, and so he has seen it all, I think. He's very much built his career on, I think it seems to me, Bill, looking from the outside in, you've been like underwriting fundamentals, like trying to progress in terms of digital distribution strategies, and my understanding of Rainbow is you're maybe on a mission to flip the script a little bit, and how are you trying to deliver insurance to SMEs. And so I could not be more excited to have you today, and I really, really appreciate the time.
Well, Nigel, thanks for having me.
Bill, I'm going to jump straight into it. You've been in commercial insurance for a long time. 2 decades, is that right? Something like that?
A little more than that, yeah.
A little more than that. We'll keep that. We'll say 2 decades. We'll hold your age.
Yeah, I think that's fair.
And so, what's changed the most in terms of business and coverages from when you started to now, and what hasn't changed at all?
Well, I think what's the easy answer as to what's changed the most since I've been in the business anyway is the technology. I think anybody off the street could have given you that answer. What hasn't changed, though, is pretty interesting. The fundamentals of what we're really here to do with insurance, which is it's built on trust. As insurers, we're delivering a promise. When somebody has a tragedy happen, we're there to step in. Are we going to honor those promises that we're making? Like, the fundamentals of what insurance really is hasn't changed at all. So as long as we keep that in the forefront when we are building out these new products and these new companies, I think that's where the rubber really starts to hit the road, and we can do some really great things. The technology has been an incredible tool for us to do that. Right? We can react faster. We can get better insights into what's happening with our risks, with our brokers, and all the partners that we have. It's just been fantastic, the speed at which we can deliver more accurate, better prices, everything like that. It's phenomenal.
I think you could probably make an argument that, I don't know, you've been in the game for 2 decades. You could probably make an argument that some of the core fundamentals of insurance haven't changed for centuries, and probably for a good reason, right? A good reason that those core fundamentals are the principles of how pools of risk and all the core pieces of insurance work.
Absolutely.
Yeah, and so if you were to then look at why Rainbow, you've taken all of this experience and said, actually, we want to approach this a little differently. Can you maybe talk us through? There's a bunch of founders that listen to the pod, and so they're always interested in the founding story as part of the puzzle. So can you talk us through your founding story?
Yeah, well, I think what really intrigued us and led us down the path to what is now Rainbow was refining the way that small business insurance can be underwritten. Traditionally, it's a class, or it's a size of class that the insureds really lean on their agents, their brokers, their advisors to help them through. There are so many carriers that can provide coverages. What's the best deal? What do I need to look out for? There's so many options. Help me navigate all this. So leaning on those principles, what can we do to make that broker's job easier, to deliver a solid product, screen the applicants in the right way? So if they're doing something extra hazardous, does that get put into the same mix as those that are taking better care of their properties, for example? So what can we do to make that process easy for the broker, deliver a high quality product that's going to be there when they need it, with reasonable pricing all along the way. So that's what we set out to do, and we wanted to really tackle an industry that needed our help. So when the idea of Rainbow was coming out, we were also in COVID, right? So what happened was COVID, restaurant industries, you're sitting every other table sort of thing. Sales are down. Some of them are shutting down. Some of them are moving their seating out onto the sidewalk. Like there's a lot of different things happening in that industry right now, or at that time, and it was really disruptive. And a lot of uncertainty. So we wanted to take that problem and come up with some solutions from an insurance underwriting standpoint that are sustainable and would be of a service to that industry. So restaurants, for some of those reasons, was our first industry that we tackled. Now, historically, restaurants do have some insurance challenges. They burn up from time to time, kitchen fires and things.
Yeah, exactly. I was gonna say that. I was gonna say I know COVID was a struggle for restaurants, but historically, restaurants are hard businesses to underwrite, and so you're taking a bull by the horns.
Yeah, they burn up. Sometimes they get sued for liquor liability and things like that. Somebody makes a mistake, has a couple too many drinks, and gets into an accident. Those can be pretty damaging claims. So we wanted to really find an industry that there's enough there to, and enough of an addressable market for us to tackle with all of our energy, but also something that had some problems to solve. So that's why we went into restaurants. And there's also the side note that we just like going to them. So we like having fun in our day-to-day work. And that's also an industry that allows us to do that. It's really rewarding to go into one of our client insureds and have a meal there and give back a little bit in that way.
Super interesting. I could not agree more in terms of having fun while you're at work. That is an important piece of the grind of growing businesses. Having fun is important too. And when you think about the restaurant itself, when you're thinking about underwriting and you're thinking about how you're approaching it differently, are you kind of using different data points? How are you impacting underwriting to be able to make the risk more profitable, support the business better? Like, can you talk us through that around how you tried
Sure.
to take that on from a different approach?
Yeah. And I would say there are a number of Insurtechs out there that have wonderful technology, wonderful platforms, and some of them have the strategy of reducing the number of questions that they ask. You put in fewer data points and they can pull in enough information to give themselves enough comfort to deliver that quote and allow the agent to proceed to binding. Um, we take a lot of that same concept, but with a twist. So our application is going to be much longer than some of those operators, and we're okay with that. Because we've really drilled deep into the industries that we serve. So the questions that we ask, yes, there might be more of them, but they're very relevant to that industry. It's things like, what types of cuisine are you cooking? Because that might lead us to know, okay, you're using a wok and maybe you need to be cleaning that hood a little more frequently. So we're asking thoughtful questions, and the agents that are filling these applications out, they don't mind it because they know that we know what we're doing. At the same time, we're also pulling in data from other resources so we can measure things like wildfire hazard, hurricane hazard, all of these different things in real time, as well as some of the liability characteristics of a restaurant that we want to know about. How late are they open? If they're open till 2 o'clock in the morning, that might present a different risk than somebody that's closing at 10 p.m.
Interesting. That's super interesting. So, is the result of having a longer application process that you are able to be more aggressive from an underwriting standpoint in terms of premium? Does it give you ability to deliver more coverage and then more value? Like, how do you think about that in terms of the input being more data to get better understanding, and then the output being like the advantage being what's the advantage for you?
Yeah, there's a couple things going on simultaneously. One is the eligibility. Is it a risk that we want to insure? Does it fit what we're trying to do? Maybe that 2 a.m. closing establishment is more of a bar and maybe doesn't fit this particular model, but maybe the other one does. So the first screen is eligibility. If you have a chunk of risk in your portfolio that you're not anticipating, it's hard to sustain that, right? Because you're going to end up with losses that you didn't anticipate, and things go haywire from there. So the first thing, and what's most important to us in that process, is eligibility. And then we dial in with all of these more granular questions to really get the pricing where we feel it should be. So many of our questions are going to be eligibility based. A lot of them are going to be pricing based. So we can put the right price out there. So we can come in next year at renewal, have a consistent price. Now we have customers that are more loyal to us because we're there year after year after year.
Yeah, interesting. And are you in all states, Bill? Have you targeted a few states in terms of kind of where you're currently active?
So in the U.S., there's two primary channels. There's the admitted market, which requires regulatory filings before you can sell those policies. And then there's the non-admitted market. Today, Rainbow's products are all in the admitted space. So we're doing a filings rollout. We're currently live in right around 30 states, 30 of the 50, and continuing to roll more out. Just got an approval in earlier today that we're about ready to announce. So that's exciting. Every time we get a new state online, that's a lot of fun for us. But yeah, and then eventually we'll be in all 50 states.
And has there been some of the US insurtechs I speak to, there's a bit of a strategy to rolling out through states, like some are a little easier to get through, a bit quicker. Some you take a little bit longer. Maybe there's more risk, different pools of risk in different states. And so have you been quite strategic in how you've thought of rolling through the states?
Yes. And maybe not with the same strategy that others would take, but we chose one of the tougher states first. We picked Texas as our launch state for a couple of reasons. The regulatory climate there it's not too onerous, but the regulator there is pretty thorough. They're going to look through the entire filing. They're going to point things out that they think are off. So the idea is, okay, if that regulator will approve this, it's going to be much easier to get it approved in other states. So we wanted to jump over that hurdle first. We didn't want to do something that was too easy right out of the gate and then have to change it the next time we get to a more challenging state. So we wanted to know that our product was going to work in many places. It's also a big market. It's one of the larger insurance markets in the U.S. So it would give us enough opportunity to refine the product when we did launch it, which ended up playing out very nicely. And then from a loss ratio standpoint, there's also a lot of things to worry about in Texas. The weather can get really interesting. You've got the whole hurricane exposed area. You got some wildfires and hail in the north and tornadoes. And then, if you look back to early 2021, Winter Storm Uri was absolutely devastating to a lot of homes and businesses in that state. They had these rolling blackouts. It was really quite the insurance event. So there were a lot of things to think through when you're launching in a big, complicated state like that, and that's why we chose it first. Since then, it's been a process of combining some of the easier rollout states and maybe some of the more cat protected areas, and then the places like California that have had their own regulatory challenges, maybe a longer filings process to go through. So just blending the rollout map of all those things.
Yeah, interesting. We had like a slightly similar strategy on obviously a technology business, but from a customer perspective, we took a similar route, which was we actually went the opposite to what a lot of insurance technology companies do, and we started at the enterprise versus starting at the small MGA. And we did that similar reason, which is we knew if we built the platform in a way in which an enterprise customer could use it, and it had all of the InfoSec and all of the requirements that an enterprise customer would need to deliver a product, then we would be able to we know that it would be fit for purpose and be able to deliver really easily for a smaller business. And so it's a slightly different approach, but like I suppose the same thing, which is like bite the really hard piece off first, and if you can solve that, then everything else underneath it is a little easier.
Exactly.
Yeah. And so, and Bill, did you take any external capital when you were starting to grow the business? Has it all been kind of organically grown by you guys? How did you approach the kind of early stages of growing the business?
Yeah, we did take external capital. That's a majority of what we have through the venture markets. Um, yeah,
Yeah,
so
very
that's
cool.
how we got funded to start.
Yeah, very nice, very nice. And you speak about improving the insurance transaction, and I suppose calling maybe the traditional model a little broken. And I said a lot of folks say it, but how can you talk to me about then, like, if you believe that is true, and how Rainbow is like fundamentally like fixing that?
Well, I think one thing that sticks out to me is consistency.
Mm-hmm.
Um, that's something that we've always strived to do is deliver consistency. Um, if you go to some traditional insurance companies and you present two different underwriters with the same risk, you might get two totally different results. One of them might decline it, and the other one might give it extra credits. Um, it just depends on how they're looking at that, what type of information that particular underwriter is going to want to see and evaluate when they're looking at that file. So by building the system that we've built, where we get all of this data that can really help us define what we think about this particular risk, and we can apply that with a data-driven model consistently across many, many risks, then we're going to have a consistent result. We're going to give that the insured and the agent something that they can count on, and it's going to make sense. And the next year and the year after that, we're going to be able to come back and say, okay, here are the adjustments and why, or we're going to provide the same thing this year and because it's working. So I think if you can lean on that data, then it makes all of those transactions much easier. It's going to help with our retention. It's going to help us identify pockets that need to improve or not. And I just think that consistency is going to be huge. And then with that consistency, we're also able to operate a lot faster. We win a lot of deals on speed because once it gets into the system, the result is right there. It's instant. So
Yeah, and I suppose that's one thing that a lot of insurtechs try and bring, right, which is velocity. But it sounds like a little bit there, which you're saying that sometimes you could argue that if you have velocity, you don't have as much underwriting discipline. But it sounds a little bit like what you're saying is you get both. You kind of get the speed, but you also get the underwriting discipline.
we're very intentional about this.
Mm.
And I think this is one of the things that excites me about Rainbow the most is this intentionality between blending the technology world and all of its capabilities and the things that it can do with some of these fundamentals of insurance. We talked about some of that earlier in the discussion, but what we didn't talk about is that it's still at the end of the day a relationship business. You know, we have people out there that are counting on us to deliver. They want to be able to call you on the phone. They don't want to just put something, in many cases, into a machine and deal with the result that spits out on the backside. Sometimes the result is good and they're going to roll with it, and they like that because they can move very quickly then. But when they have a question or they want to have some extra consideration for something because, you know, these are commercial risks. They're not all going to be exactly the same, right? So each one's going to have its own story. So our ability to listen to that story, hear about what might or might not make this thing fit into our model, I think that's what really sets us apart. And that gets me so excited because our agents come back to us time and time again because they have direct access to the underwriting department. They have a salesperson that they can call and strategize with on how to sell more of our product. They have customer service folks that every minute of the day are available and help walk them through whatever situation they have. It's really a nice setup.
Yeah, it's nice. And but if you were to think, a lot of the MGAs that I speak with, that have aspire to be to do what you're doing, one of the first challenges that we hear them talk about quite a lot is technology decisions early, and that is, do you build? Do you find a vendor and build on top of them? Do you partner or do you buy? There's obviously a lot of decisions to be made early around like the technological approach you're going to take. It sounds a little bit like you guys have gone the build approach, but could you talk me through that, Bill, around maybe how you made that decision or what decision you made and then kind of what the result has been?
Yeah, I think that was part of our founding fabric was the technology piece. We have wonderful technologists, and that was really part of the backbone of what we were doing. And then having that infrastructure and bringing in a team full of seasoned insurance professionals that knows what the market needs, what the insureds need, how the regulators require things, having that expertise alongside those technologists building it together is really, I think, the key is getting both sides of the house working cohesively.
Yeah, it's interesting. We obviously, like I mentioned, we work with a lot of the enterprise side, and they probably have a lot of the first one, which is lots of insurance expertise, but not too much technology expertise. And so I guess that's the advantage of starting green, right? Is that you get to make the decisions, you get to bring the right folks to the table, and go from a first principles approach, which is this isn't just how it has been done. This is how we would like it to be done, and therefore we're going to build it in that way.
Yeah, startups are fun for me anyway, because nobody's ever built Rainbow before. There's not a blueprint to how to do this. Every day we get to get up and say, what challenge are we going to try and overcome, or what challenge can we go find to solve? And that's really exciting to be in an environment that really fosters that type of thinking, and working alongside other folks that think that same way is really rewarding.
And it seems as well you've taken a bit of approach of, there was a lot of talk around not just looking after the claim when it happens, but trying to prevent it. And I think for a few years we've heard a lot about that, but never really seen people walk that walk of actually delivering risk prevention. And with a bit of digging I did before, it looks like you guys are doing a bit of that. Can you talk us through it around how actually you started to think about it, and not just think about it, but actually deliver it, and how's it working in practice with your small business customers?
Yeah, and that is one of the bigger challenges in this space. We do a number of things. We try to layer our loss ratio protections in many different ways. Some of it with the applications that we talked about, and some of the data that we're pulling in. But then on the risk prevention side, we do a couple things that some are maybe a little harder to measure than others. But we provide premium relief for insureds that take some proactive steps with us before they even buy the policy. If they're going to submit things like images of places that we can't see online, because restaurants generally have a pretty healthy online footprint, right? You can see what happens in them, but you can't necessarily see in the toilet stalls. That kind of matters to us. We want to know that the place is taken care of, it's well lit, things like that. So if somebody sends us a picture of the toilets, like, to us, that's a great thing. Most people don't want to see pictures of toilets. We do. So the idea is this behavioral concept that if the insured wants to go and take that step where they're going to take pictures of the toilets and send them into some insurance company, because they get a premium discount, chances are that operator is taking a little better care of his or her establishment, right? They're not afraid to take the picture and send it in. Whereas if the place was in disrepair, they might not have that same mentality. It might not be the right risk for us. So we're playing into that a little bit. But I think some of the other things that we're doing now might be a little more tangible. So we've partnered with a company that has a safety system with different modules depending on what the restaurant needs. They have monitors that go inside the like the walk-in coolers, so we can measure the temperature. If the power goes out, now they don't necessarily just have to throw away all of their perishable items. We know what the temperature remains at, and if it remains in a healthy, safe level, then they can keep the food in there when the power comes back on. So things like that. They have hand washing stations where you can check to see if there's any bacteria under the fingernails. If the restaurant worker washes their hands, they get scanned. Nope, you got to go back and redo it. Things like that, just getting creative and, again, delivering some premium relief for insureds that want to take the steps of implementing these features, which we think are wonderful. Uh, will they necessarily remove X number of premium or claims dollars every year? No, but those are the operators, the ones that are taking care of their premises in that way. They deserve the relief on the premium side
Mm.
because they're doing things the right way.
Yeah, and there's a big business over in Australia called Safety Culture. It's like an auditing business, basically, like a safety auditing business. They're enormous, not just here, but now I think they're in the UK and potentially the US as well, actually. And they've launched an internal insurance business because they found that all the auditing that they had, these folks going in and doing audits of all of these big commercial buildings, and we're looking at fire extinguishers and air vents and sprinkler systems and all of the things that needed to be audited. And actually they were all like fantastic data points to go into an underwriting model, and just even like tables outside of restaurants and where were they situated, and umbrellas. There was a wonderful piece of claims data around umbrellas being blown onto the road and them damaging cars. And that was one of the large, when they look back through the historical data, that was one of the consistent, most like biggest consistent claims that came through with these umbrellas that were outside restaurants being blown onto roads and damaging other things. And so they added this into the audit. As long as they were locked down, then that was like a fantastic data point. And so I thought it was just super interesting that as soon as you're looking at it, getting all these new data points from premises that actually have a really fundamental and meaningful impact when you're looking at claims and ratios, how it can really impact it when you don't you don't perceive that to be a thing, but then actually when you look through the data, it's really impactful.
Yeah, for sure that stuff can happen very easily. It's a good thing to look for.
Mm. Bill, we've managed to last about half an hour, and I haven't even uttered the word AI yet. So I feel pretty proud of myself, actually. But I feel I feel like two folks who are working in Insurtech. We should probably talk about it just a little bit.
Yeah, what's an Insurtech conversation without AI coming up, huh?
That's right, man. We did well. We lasted 30 minutes, so I reckon it's about time. And we could go anywhere, but I think. I understand it a little bit, again, looking from the outside in. You never really know what's under the hood, but I hear that you guys are doing some work in this space. Can you give us a bit of a sense of how you guys are thinking about it? Like maybe what you're thinking about today, maybe what you're thinking about in a year's time?
Yeah, I think we talk about it a lot more internally than we do in our promotional materials. I think most consumers now understand that AI is interwoven into everything they do. I mean, if you use Google Mail, like it's there.
Mm,
Every app you get, there's hit the button and we'll refine this for you, right?
mm,
So I think it's not foreign to everybody. We don't need to tell everybody that there's AI involved. It's
mm,
just kind of part of the world now.
mm,
But some of the things that we do that are a little more unique, perhaps, are really on the underwriting side,
mm,
where we're able to use artificial intelligence to give us deeper insights. What has happened at this establishment that isn't apparent in the application process or with some of these data providers. Historical events, maybe crime events that have happened on site. That stuff is way easier to get our hands on now than it was even just a couple years ago, without a lot of manual lift to go search for it. So again, back to the speed in which we're able to operate. If we can get those additional red flags during the underwriting process, that can be really key to our business. And then on an ongoing basis too, does a risk change? How do we get alerted to that change in risk profile? We're using AI in some creative ways to give us those insights. So when that business does present a different hazard than what they did, we want to know about it and be able to react to it. Sometimes there's a way to help them with some risk management. Maybe they don't realize that what they've done is creating a higher hazard. And sometimes they're doing it intentionally and they're just no longer a fit, and that's fine too.
Yeah, I think virtually everyone I speak to is thinking about a little similar to yourself, which is internal tooling to improve systems and processes versus external to customer and changing that experience. And primarily because they're predictive models, and we're asking for essentially on the consumer side a deterministic thing, which is the answer has to be right or wrong. And I don't know what your view is here, but our view is that we're just nowhere near being there yet whether it's to the agent or whether it's the end customer. We're just not there yet in terms of the predictive models to be reliable enough in a like a regulated space like insurance.
Yeah. Some of the service tools that are available now, whether it's things like online chats or even telephone calls, some of them, it's hard to determine if it's a human or not. So I think that technology is not very far away from having a bigger presence in our day-to-day life as well.
Yeah, you're right. We actually did a little thing inside the business a few weeks ago, and I had a bunch of my context and a bunch of my podcasts into a model. It obviously then learned how I spoke, my intonation, how I kind of create sentences, all of those kind of pieces. And then I let one of the team, I kind of had a team having a conversation with it. And was it me or was it an AI? And the team had it really hard to tell the difference. And so, yeah, I think you're absolutely right. It's not robotic voices anymore at all. You can very much feel like a human.
Yeah, yeah. Just to give you an example as well, we had one that our sales team had us listen to in one of our team meetings a few weeks ago, and the AI, you couldn't tell it was an AI, and the person on the other end of the phone, their dog started barking in the background, and the bot handled it perfectly. Like, do you want to take a break so you can get the dog under control? Like, it was so natural
Mm.
sounding, which is a little scary, but it's also incredibly helpful technology if you use it the right way.
Use it in the right way. That's right. And you've obviously done a lot of hard work in investing in technology, and I think having that core infrastructure and architecture to be able to build on and have the flexibility to use the different tools that you want to use over time is actually a really, really important thing. And so sometimes obviously the capex cost and time cost to do that job of building the right technology and having the right architecture to be able to execute sometimes can slow you down a little bit. But actually, when you think in the medium term, I know flexibility is super important for you guys. Actually gives you a bunch of flexibility in product, service, design, customer journeys, all of those pieces. Is that how you have been think about things?
Yeah, yeah. We try to look at it from as many angles as we can, and we have professionals with lots of experience that are coming from different perspectives as well. So yeah, it helps us make quick decisions that are well informed. Um, and also we're looking at all these tools as they come out and how they might impact us, whether it's something that we use or something that we have to compete against.
Bill, I could talk to you all day. Can we get the crystal ball out? Can we take Rainbow? 3 years, maybe 5 years is a bit too hard. Maybe 3 years is just about doable. What's the path? Where do you want? What's Rainbow going to be doing over the next kind of few years?
Yeah, thanks. That's a good question, and I think it's already started. So most people know us as restaurant insurers, and that's what most of what we've been talking about has been restaurant insurance. But we're already rolling out our second program. So the what we built always had in mind that we were going to be something beyond just restaurants. Um, so right now we're launching our beauty and wellness program. So things like day spas, nail salons, fitness centers, things like that. Um, so that is rolling out again. It's an admitted product, so we have the whole filings process that we're going through at the moment. It's live now in about 4 states, though, so we're excited about what that's going to be. And we're going to continue launching new industry verticals on the Rainbow platform. Maybe some of them will be non-admitted, maybe they'll all be admitted. We're kind of working through a lot of that stuff right now, which is, again, the fun part. We get to build every day. So 3 to 5 years, we'll probably have a number of different industries that we are servicing, and we're going to continue to take that approach though of that deep dive into each one. We're going to ask the relevant questions. We're going to understand as much as we possibly can about all those risks in a relatively pain-free way, so we can be that consistent performer, that top performer for all of these industries.
Bill, when you think about, obviously you thought about restaurants to start with, and you looked at the underwriting challenges and getting some nuanced data sets. When you're thinking about your new and your next industry verticals, are you taking a similar approach of, this is why we chose the kind of fitness and beauty, because we believe there's a lot of information that's not yet gathered that could be gathered to help us in the underwriting process?
Yeah, I think each program that we launch is going to have a little bit of its own story. Beauty and wellness, there was a lot of overlap with what we had already done with restaurants. A lot of the insurance product itself is built on the same backbones, a lot of the same policy forms, things like that. So, what it allowed us to do is focus on the technology piece and, okay, we have this restaurant focused platform. How do we expand that into some totally different industry? Where we didn't have to worry so much about the insurance product policy form, that type of stuff. We got to focus on getting the new program up and running alongside restaurants, which was that was one of our primary targets with that, was to do something where also our distribution partners, you think about a strip mall and there's a restaurant next to the nail salon. Well, there's a higher probability that the same agent might be servicing both of those insureds. So there's some overlap there as well that we wanted to be able to service. The next program might be something totally different, might be a different product in and of itself, which is part of the fun. Now now that we've figured out how to expand that system to multiple different industries, now we get to really get creative.
Super, super exciting. Now, Bill, I just got one more question for you before we wrap. I want to take Rainbow aside and just think about small business insurance. The small business insurance, or SMB as you call it in the US, landscape. Same kind of question. So next 3 to 5 years, is you going to see what's going to shift? What do you think if we were going to have this conversation in, say, 5 years' time, and we're looking back? What do you think the biggest shifts that we're going to see over the next 5 years are going to be? Maybe specifically in small business commercial insurance.
Well, I think if you would have asked many people a few years ago, you would have heard that there was going to be a big migration to direct to consumer, where the small business can buy directly from the insurance company without having that agent in the middle. Um, it's one of my beliefs that the agent provides tremendous value in the insurance transaction, and when we were building out Rainbow, we kept that at the forefront. This is for agents to sell. It's not for us to go directly to the restaurant or whatever industry it is. And I think that's going to play out. There will continue to be people trying to chip away at that, trying to go direct to consumer. And I think there's going to be, I just think the value that the agent brings is just too great. They're going to remain there. And I think some of those insurance fundamentals, again, they're going to continue to rise up and the technology is going to adapt to some of those fundamentals. The regulation is going to be the regulation. We still have to play within that box. I think you will see a little more migration to some of the non-admitted markets in the US where the regulation's a little easier and you can get to speed to market a little bit better. There's pros and cons with that, but I think you're going to continue to see that become a bigger part of our industry.
Awesome. Well, it's exciting, isn't it? It's good to be on the treadmill of trying to build new things. And so, Bill, thank you so much for your time today. We're definitely going to be watching and cheering from the sidelines. So I really appreciate your time.
Great. Thanks for having me again, Nigel. I really enjoyed the conversation.
Thanks, Bill. Well, everybody, I hope you enjoyed this episode as much as I did. If you want to see Bill's and my faces, you can jump to YouTube. The link will be in the description below. And as always, if you want to hear more from industry leaders who are pushing the boundaries of insurance, please do check out our other episodes of our podcast series, Building Tomorrow's Insurer.